I'm really excited what we are about to show you today because we've been running this accelerator program. We've been running it for like a year now. It's been sort of a secret thing, and I'm saying that it's sort of a secret thing because we didn't really show it to anybody. We just offered it to our members of our trading courses. But we thought that we might as well show it to you, show you what we do, give you a chance to talk with David and show you how he runs the Accelerator program and give you a chance to join up if you want. As I was saying, we've been running the Accelerator with our members for about a year now. The man behind the project is David. David has been trading for over 30 years, which is just awesome. But the awesome thing about David is not just he's a very good trader, but also what's very, very important is you can pass his knowledge to other people very effectively. He's very effective at that. He's also very passionate about trading, and it's important that he's a very, very good teacher and mentor, not just a great trader. And that's why I think he's like the perfect man and the perfect fit for the Accelerator program which he runs. And he will tell you all the details about the Accelerator and especially about how he trades and what he focuses on there. So I don't want to really talk too much about it because that's his thing. I just wanted to kick this off, say hello. If you guys have questions, I see that the chat is already running, so ask your questions. We'll also have a little Q&A at the end, and yeah, I think I'll just pass it to David and we can get this started. So thanks so much for coming. Here goes David.
Okay. Thank you, Dale. I appreciate it. As far as questions go, let's keep questions until after. This is not meant to be drawn out, long webinar. I want to keep things simple here. I want to show you what we do quickly and just give you an idea of what the program is all about. But I just really want to get into the charts here. So let's we'll take all questions after, I promise. I am going to share my screen here. So the theme for today, simplicity. Very simple. That's it. Keep things really simple. As Dale mentioned, I've been doing this for a long time. I've tried everything at some point in my career. I mean, everything, every indicator that you found on a platform, moving averages, anything you can think of, different strategies. Okay. Um, Everything started to come together for me when I discovered volume profile. Okay. Yes, it is recorded. It's live. It's live. Oh, this is live. Yeah, but we're recording it. Volume profile is what really helped me simplify everything. And and that's really the main thing, because when I first discovered Dale, a bunch of years later, because this was like a 2008, maybe 2015 or so, Dale was doing the same kind of analysis that I was doing, and that was kind of rare at that time, volume profile. Now it's become a lot more prevalent. But what I liked about what he did is he simplified everything, and he taught me ways to do things and simplify things and new little nuances. And that's kind of the way that we run everything here, okay? Because you go to YouTube now. I mean, my God, there's so many different types of strategies, and I mean ICT. I mean, the different type of things that he talks about, just the all the levels and all the concepts and just so many things thrown out. And then you have ICT, you've got what we call smart money concepts. To me, it's all price action. It was price action, before this was all invented. But it's just very complicated. So what I try and do is I try and simplify everything as much as possible. Okay. Does that mean you're going to get rich overnight and that this is going to be something easy for you? No, it's still hard. It still takes time. But if we can simplify the process for you, that is going to make you a higher probability of being successful. It's also going to speed up the process. Okay. I'm sure everybody here has a story about how long it took to them to be profitable. Dale, myself, I know Sterling, I know we've got profitable traders here. Some people, a lot of you are still not profitable. Everybody's got a story. For me, it was 5 years before I saw anything. Okay, it takes time. And that's the one thing I preach here. It takes time. And it's different for everybody. Okay, but the first thing we got to do is we got to simplify everything. So the way I look at the markets is very simple. Okay, the only thing that matters to me, and this is on any time frame, are two things: fair value gaps, which are what we call internal liquidity, and they're all over the place. Everybody knows what a fair value gap is. Fair value gaps and pivot highs or lows. That's it. Okay, we've got a pivot high there. We got one just above it. Okay, we got one up here. That's all that matters to me. Okay, fair value gaps and imbalance are what we call internal liquidity. Okay, they're internal levels in between these pivot highs or lows. Okay, you have a pivot high, a low, a pivot high, and in between, okay, you could have one fair value gap or you could have multiple fair value gaps, right? These are internal liquidity levels. The external levels, pivots, are external. Okay, this is all you need to understand. All the market does, okay, is go from well, let's start from internal. It goes from internal to external, back to internal, and then to external. And it just repeats and repeats and repeats. Okay? We're not talking about order blocks. There's no order blocks. Internal to external, to internal, to external. Okay? That's all the market does. And if internal is fair value gaps and external is pivot highs or lows, then all we need to do is trade out of internal liquidity to external liquidity. Okay? Everyone, please hold your questions till after. I'm not going to answer any questions in between. Okay? So that way we don't stop the flow. I promise I will answer all your questions after. Okay? So if that's all that matters, that's all we're going to look for. Okay? Going from internal liquidity to external liquidity, tapping into internal, continuing higher. Okay? Once we get to external liquidity at any level, okay, you then retrace back into internal liquidity. So those are our major key levels. That's all we're worried about. If we accept price and defend internal liquidity, the expectation is for price to go to external liquidity. Okay? If we break an external liquidity level like here and price fails to accept buyers below and comes back higher, okay, that is an external liquidity moving back into internal liquidity, which are always fair value gaps. And that's all we need to worry about. How price reacts at these levels. Just like a volume profile, when price is in a range and it looks to break out of a range, what does it do? It price discovers. Price is always in price discovery range. It needs to find areas where large transactions can occur. And if you understand and go by the concept, what can't go down must go up, and what must go up can't come down. Is there a problem with anybody's audio? Is the audio fine? Or is it just okay? It's just you, James. It's just you. Maybe you can, Sterling, maybe you can IM him and help him possibly. I'm not really sure. Okay. So that's all we're going to worry about. Okay. Now, this is how I get my bias. This is how I get my narrative. And this is how I execute just by using fair value gaps and pivot highs or lows, going from higher time frames down to lower time frames. Okay. Today's webinar is not going to be about bias because I can go on for hours and hours and hours. And we've got tons of videos and methodologies, and we do a lot of this in the live session. Okay. I want to show you how we simplify all this because a lot of the times, okay, people struggle with bias. That to me is what the consistent issue is with people. They struggle with bias because they're taught to start on a monthly time frame, okay, mark everything out, then go to a weekly time frame, mark everything out, then go to a daily time frame, mark everything out, then a 4 hour, and you're supposed to get your bias on all of these. This is bullish, this is bearish. Then all of a sudden the market opens and you're on a 1 minute chart. I mean, it doesn't work. People get very confused. Okay. So people need to understand that bias does not mean opinion. It doesn't even mean bullish or bearish. Okay. I'm going to show you what's important in the market, and that's draws on liquidity. Where is price going? If price can't go down, it must go up. If it must go back up, where does it must go back up to? If price can't go up, it must go back down. Where could it go back down to if that happens? If price discovers higher and continues higher, well, then where can price go to? That's all that's important. Okay. How do we figure out what's important? Well, we start by marking out key levels. Okay. The first key levels we're always starting to mark out is fair value gaps. Fair value gaps and pivot highs or lows. Okay. That's the first thing that we always mark out. Okay. On a chart. All right. Now we need to discuss what type of levels are liquidity. Okay. So there are a whole bunch of them. Some of them are time-based. Okay. And some of them will be engineered liquidity. And I will tell you the difference. All right. So let's just go to a blank chart on a 4 hour chart. Okay. Just the chart that I have. And I'm going to take all the drawings off. Okay. So let's discuss how do we mark up a chart? Because by marking up a chart, you are now just going to need to react to levels instead of trying to figure out a bias, because that's the hardest thing to figure out, a bias. It's very, very difficult. But if you mark up your charts and just mark up the levels, and now you're watching for price to react to those levels, and I'm going to show you the different type of levels. Okay. You're going to start to see that you don't need to determine a bias. You need to mark out key levels, and then you need to react to the way price reacts to those levels. That's it. So the most important part is starting to mark up your charts. What are the key levels? Well, we start with some of the simpler ones. And if you look at my chart right now, I have an indicator that plots this automatically. It plots previous day low and previous day high, PDH and PDL. It posts previous week high and previous week low. And it also does previous month low and previous month high. Okay, now, what I really like about this tool is that once price trades through one of these levels, it stops expanding. So these levels are always expanding on my charts because these are key levels. These are key levels for price to draw to and draw away from. Okay. The tool's name, well, it's a tool written by one of our members, so it'd be inside the circle. I'll ask that at the end. I'll show you all these tools after. Okay. Once it's mitigated, it doesn't expand anymore. So only the levels that are not mitigated yet are on my screen, and they're very important levels to trade into. So that's where we start, and I have a tool that does it for me, so I don't have to mark them out. Perfect. Okay, now, the next thing I want to mark out is sessions, highs and lows. Okay, and I have a tool for that too. Okay, so what this tool now does, this is on the hourly chart. What this tool does now is this tool, okay, will mark out the kill zone Asia and London session highs and lows. And it'll do the same thing as that other tool. It will keep expanding until it's mitigated. Once it's mitigated, it stops expanding. Why is this important? Because these are key levels. Okay. Asia lows, London highs, Asia highs that are left open coming into New York session are all areas where we can target and we can deliver from. We don't need to worry about which one now. We're just marking levels. So now I have the levels on my screen. I have previous day high, I've got previous day lows, I've got session liquidity that is still open. I know all the levels that are still open because all these levels are going to get hit at some point because there are orders below these levels. There's liquidity below these levels. Okay. And sometimes you can draw a profile and see where the volume is in that area. Okay. We'll get to that after. So session highs or lows, Asia and London are very important times. They're overnight highs and lows. These are very high liquidity areas that the market will search for, deliver to, and deliver from. Okay. And again, it's all about marking levels. Okay. The other thing we want to do is we want to mark all our pivot highs and lows. So I usually do that on the 4-hour chart. Okay. I don't have the session liquidity here. Now, a lot of these pivot highs or lows are all, a lot of them are all filled in from these previous days, weeks, and lows. But other than that, I'll just go in and, I'll take my blue line and I'm just going to mark all pivot highs or lows. That's it. Very simple. Okay. Anything that matters, like wicks like this, I'm marking. And I'm marking fair value gaps. Here's a fair value gap, a 4-hour fair value gap. Here's a fair value gap. Okay. Here's a fair value gap. I'm just marking up charts. Guys, please, there's always a couple of people who have trouble with the video or the audio. It seems like everything is fine for most people here, I assume. So let's just focus on the trading. If there's a couple of people here who are having problems with sound, it's unfortunately likely on your end. There's nothing I can do to in the middle of the webinar to fix that. Yeah, perfect. Exactly. So let's kind of continue. So again, I'm just marking up key levels. That's it. Highs that have not been traded to. Okay, and then I'm not doing any analysis here. I'm not making any opinions. I'm just marking up levels. Okay. I got higher levels here. Look at all these levels. See, these are all levels, highs inside here. Okay. And now I've got everything marked up. So now I can save it. I can go back to the hourly chart. So now I've got things marked up, right? Just marking up. Pivot highs or lows, fair value gaps, higher time frame fair value gaps, the ones that matter. Okay. And I'm just marking everything up. Session highs or lows. And I'm not doing any analysis yet. I'm just marking up. Okay. So once I've got my pivot highs or lows, my fair value gaps, these are the only things that I can do really pre-market. Because these are time-based things. The previous day low, the session liquidity stuff. It's all, time-based. Now, we're going to go into other liquidity levels that are going to be key that are engineered as the market opens. Now, sometimes they can be engineered, okay, before the market, pre-market, okay, and it's usually going to be done on a shorter term chart, like a 1 minute, okay? So let's kind of go over the key ones, and I'm just they're easy to understand, so I don't need to show example. Let me So here are liquidity levels that get engineered during the day that become key levels that we mark out. Okay. Now, the first one is going to be perfect equal highs and equal lows. That's it. Plain and simple. What do I mean by that? Okay. You've got a high here and you've got a high here, right? You have exact equal highs, dead equal highs. I have a tool to do that as well. Equal highs and lows, EQL highs and lows. It will mark equal highs and lows as long as they're a couple of bars apart. I don't want a 1 minute chart or a short-term chart that's giving me an equal high or low that's just 1 bar apart. That's not an equal high or low. Equal high or low on a 1 minute chart has to be at least 5 bars apart. The further apart that equal high or low, the better. But equal highs or lows are engineered liquidity. You have an index that is $30,000. When you have equal highs or lows to the tick, to the 0.25, that's engineered. That's not retail traders doing. That's market makers. It's an unfinished auction, as Dale always says. It's an unfinished auction. And when price draws away from it and leaves it, it's a great draw on liquidity. And when you get your entry model that is indicating towards that level, and we'll go over entry model in a little bit, that is one of the best draws on liquidity. But this kind of stuff gets engineered during the day. Sometimes it will be engineered overnight. Great, mark it out. If not, it'll get engineered during the day. But equal highs and lows, perfect. Equal highs and lows are perfect. Okay, now the next really good draw on liquidity, and we had it today, and I'll show it to you, is data high and lows. Okay, and I can add Trump high and lows because we had one of those too. Okay, and you may laugh, but the Trump candle is a real thing these days. There's a lot of tweets, there's a lot of news, there's a lot of sharp moves when he talks. So data highs and lows, like today we had CPI. So let's look at that. So today we had CPI. This is a data high or low. See this? This 1 minute candle, the 930 candle, makes a high and a low, and you mark out data low, data high. These become draw on liquidity, and they become draw away from liquidity. Okay. We also had a Trump low today. This time during the day, Trump started tweeting. Look at the wick it made. Okay. I'm going to make a Trump low candle right here, just like I have a data low. I have a Trump low. I mark it. It's a Trump low. That's what it is. You know what? It got taken out, and then price moved back away from it. It became, right? It became a key level. Remember, we're just marking out key levels right now. I'm not talking strategy. I'm not talking bias. I'm talking about key levels. That's it. Okay, these are great, 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 great A++ draws on liquidity. Okay. The next great draw on liquidity is exactly this, trend line. Now, it has to be at least a 3-touch trend line, and it has to be perfect, just like this is. Okay? Again, just like equal highs and lows. Okay? Just like equal highs and lows. This is not done by accident with retail traders. This is engineered liquidity. It's failed swing highs. Why do they do that? Because the market needs to engineer liquidity everywhere. It needs to be able to price discover. It needs to be able to have orders to fill. If it needs to go long, it needs to dip below support to grab orders, to price discover, to force buying. Okay? So when they do something like this, they engineer liquidity. It's all on a 1 minute chart. It's a 1 minute chart. Yeah, it's LR. LR is an ICT term. I don't refer to ICT. To me, it's a trend line. It's always been a trend line. I don't understand why we can't call it a trend line. Yeah, but it's true. But it's true. But yeah, all data wicks are always on a 1 minute chart. Okay. Now there is Trendline. I love Trendline. So when you come in the morning, sometimes you'll have a trend line to target. Okay, here. Great. There was one on the ES yesterday. I'll show you. Perfect example on the ES yesterday. Where was it? Oh yeah, here. Trendline liquidity. See that? You have one, two, three, four perfect touches. This now becomes a draw on liquidity. You now have a bias because this is all engineered liquidity. Okay. And then we had a delivery into a fair value gap. This is our entry model. I'll show you after. And then a delivery lower. But this is trend line liquidity. When you see this built up, you want to trade towards that. That is the market building up and telling you where price should be going. Very, very powerful. Okay. We'll go over that, Oscar. Okay, so that's trend line liquidity. Okay, now another tool I use that really no one uses, a couple of people, but it's kind of old school. But to me, it's my most important tool, and that's the initial balance. That's the yellow squares that you see right here. Okay, the initial balance is not an opening range. It's not an orb. It's not a 15-minute. It's the first hour of trading. It marks out the high and low, the first hour of trading with a green line and a red line and a midpoint, and it just shades the hour in yellow. Okay, I can't even begin to tell you how important the initial balance is. Okay, I'm going to go over the initial balance in a little bit. Okay, but the key is to have this on your chart. I have a tool for that too, an initial balance tool that I use. So it's marked out for me automatically. But the highs, the lows, and the midpoints that are not mitigated, okay, we use current day initial balance, and then we use previous day's initial balance. Okay. So I'll go over in a bit, but again, these will be all marked on your charts. All right. So now, if I'm on a 15-minute chart, my 15-minute chart kind of looks like this, right? It's got all these things marked out. Previous day low, the initial balances, any fair value gaps on the higher time frame, Trump low, data lows, everything's marked out. All I'm doing right now is creating a roadmap. I'm creating levels. Okay. Picture this being volume accumulation levels, high volume POCs all in place, like marking up all the POCs. And then as price gets to those POCs, we're deciding on how to act and we're watching how price acts, except we're using different types of liquidity. Okay. So initial balance, we're going to use today's initial balance for reasons, and I'll go into that after. And we're also going to use previous days' initial balances. Okay. Now we talked about equal highs. Equal highs are great, but sometimes you get relative equal highs. Right? That's relative equal highs. What is a relative equal high? It's basically a lower high, okay, or a slightly higher low that technically they're not equal highs, but they're so close to get together that they're technically not another pivot high. They're kind of relative equal highs. They're very close to each other. Now, if this one took out and was higher than this one, then that wouldn't be relative equal highs. That would be a liquidity sweep. But since this is lower, these are relative equal highs. And sometimes they really stack up multiple times, as you can see here. See how they stacked up 3 times? This is a perfect example right here of relative equal highs, right here. See, and it's a 4-hour chart. This is relative equal highs. Perfect example. You see that? These are relative equal highs. Very strong draw on liquidity. That's why I'm bullish, because we have a very strong draw on liquidity up here, and it's also previous week's high. Very strong draw on liquidity. Initial balance of New York session. That is correct. That is correct. I'm talking equity indices only right now. Now, the strategies we use can be used for anything, but I'm talking about equity indices. Okay, so that's that. The other one would be a higher low made inside of a fair value gap. So you see this low, it's inside of a fair value gap. This low inside of the fair value gap, or a high inside of a fair value gap, would be a draw on liquidity. It's not as strong as the other ones, but it is a level. Okay. And then finally, the last level that I would put on my chart is volume profiles. Relative, that are relative. Okay, and as you can see, I've got 3 different volume profiles on here. And what's cool about this is that each one of these profiles represents each one of Dale's key setups. We've got trend, accumulation, volume, and as you can see, as price comes down, all these little volume nodes. You see, all these little volume nodes become areas of interest. Price breaks below here, retraces back. You know how Dale teaches, when price breaks those volume areas, they now become resistance. You got a POC right here that supported price, everything, and then another down here, this volume area with a fair value gap right above it. Dale teaches this all the time. Great setup. So this is kind of like the trend accumulation setup. Now, here was another, where was it? Here. Here was another trend accumulation setup right here. But as you can see, this only had one pullback, because if you notice in this trend, all the volume was really in this area. There was one little node down here, but it was just all in this area. So price just came down here and then continued higher. With this move, it was different. The volumes were distributed a lot more throughout the profile. We had a lot more nodes. We didn't have as a profound POC here, and then we had another level down here. But you just need to mark the levels and see how price reacts. Then here we have the trend rejection setup. Clear accumulation, manipulation, and rejection. When price came back up to here, literally to the tick, nails the POC. It's a key level. And then here is the accumulation setup. Price accumulates, moves away, comes back into, trades away. So that's what I have on my chart when I come into trade. And on a 15-minute, which is kind of where everything melts together, I now have all the key levels. Now my charts are marked up. Okay, so now what do I do? All my charts are marked up. Fine. I don't have a bias. I just have levels. Perfect. Okay, so now what we do is now we can go to our shorter time frame charts when the market's open. Okay, this is today's price action, but it doesn't really matter. So I divide the day up into time periods, kind of like when you go to your job. You don't just start your job at 9 a.m. and you kind of freelance the rest of the day. Your day from 9 to 5 is not the same all day. You may start with a meeting with your staff when you first come in. You may go over and do paperwork and just, kind of go over things before the day starts. Maybe you have sales calls for a couple of hours. Then maybe you have review or something, and then you have lunch, and then after, maybe you're out in the field. Your day is scheduled. So why shouldn't trading be the same way? Why don't we schedule our day? Now you say, well, how do I schedule my day? The market opens at 9:30 and it closes at 4. Okay, well, you go to work from 9 to 5, you still have a schedule. So how do we schedule it? This is the way that we schedule it. The way I schedule it is that I schedule it during times of the day where the market has a certain agenda. Okay, and what people don't understand is that, yeah, the market opens at 9:30, it closes at 4. I'm going to trade from 9:30 to 4. Whenever I see my pattern and my setup, I'm going to trade it. That's a very, very bad attitude. That does not work. Why? Because at different times during the day, the market has a different agenda. And you have to understand that. And if you don't understand that, that's why people lose, because they're not on a schedule. So I'm going to put you on a schedule. All right. So I'm going to bring up this PDF here on the side. This was actually a something one of our students just created for me. Okay, but it'll make it a little easier to follow. Okay, can everybody see that? The PDF that I just brought over? Does everybody see that? Okay, perfect. Okay, so let's talk about this. How do we break down the day? Okay, very simple. This is our schedule, and I'm going to show you what the difference is between what happens during the day. Okay, so obviously you have Asian London session. London kill zone ends at 5 a.m. So between 5 and 8 a.m., I'm not up at 5 a.m. Some people might be. I'm usually at my desk at 6. So usually between 6 and 8, I'm doing pre-market stuff. That's it. I'm not trading pre-market. I made that decision a long time ago. I'm starting at 9:30. Unless there is CPI or red folder news like today, I'm not trading till 9:30. So between 6 and 8 is pre-market. I'm preparing. I'm going over my higher time frame bias. I'm marking up my charts like I just did. I'm marking liquidity. I'm marking anything of importance. If I can find a bias, a clear bias, great. If I can't, no big deal. Okay, now 8 o'clock comes. Between 8 and 9:20, that's the no trade zone. To me, that is pre-market liquidity building. What happens between 8 and 9:20, a lot of times the market makers and institutions will kind of be like creating liquidity on the upside and the downside. They're not really looking to move the market at that time. Very poor time to trade, in my opinion. Okay, now why 9:20 instead of 9:30? Sometimes the 9:30 move happens a little early. That's it. Sometimes, you get the 9:30 move or the manipulation or the influx in capital or the move that you're expecting. Sometimes you get a little earlier. So at 9:20, I'm on alert. Okay, most of the time it's going to be 9:30. I'm not trading here. The only time I will trade is during 3 events: CPI, which we had today. Look at this candle. Why wouldn't I? Okay, PPI, which is tomorrow, and non-farm payrolls, which was just this Friday. Okay, just the little idea from this morning. When we created this wick, this high or low, if these are going to be draws on liquidity, well, if anybody knows anything about fair value gaps and inverse fair value gaps, okay, you know that once price inverses a fair value gap, internal liquidity, we have to go to external liquidity, which is the data high in this area right here. So this was an example of how our methodology worked, targeting that data high up there this morning. That's how valuable those data highs are. We still have a data low that is open. I will leave that until it gets hit. May get hit today, may get it overnight. That is still a valid draw on liquidity at some time. The one last thing that is interesting, at 9:30, we make a 9:30 1-minute candle. At 9:30. Usually I will mark out the 9:30 high and low of that candle. If we leave that high, which we did today, that will typically make that level even stronger. Okay. If you see a couple days ago, we left. Was it 9? Was it 9 here? Here. This was the 9:30 high right here on Tuesday, right here. Look what happened when price got to it. See? It's a key level. It's important. Okay, these are levels that we target. These are levels we can take profit trade towards, take profits from, and draw away from. Okay, so once 9:30 opens, okay, the market is all about sweeping all pre-market liquidity. Okay, we usually get a move in one direction. Price will move very sharply, a lot of times in both directions. This is one of the hardest times to trade, more advanced. It could be very profitable if you know what you're doing, but from 9:30 to 9:45, typically the market, as it says, will do a liquidity grab. Okay? Liquidity grabs will usually take out buy side and sell side from predetermined and pre-generated liquidity pre-market, okay, before it even decides to go in the direction that it wants. It needs to grab all the orders and price discover really early, and it does it really, really quickly. Okay? At this time, we're looking for liquidity grabs and then inverse fair value gaps and momentum in the opposite direction to take out sell side. That's all we're looking for at that time. Now, once 9:45 to 9:50 comes, if I'm not in a trade anymore or if I'm out, I'm flat until 10. Because at 10 o'clock, what typically happens is that the market has kind of grabbed all the liquidity. And at 10 o'clock, okay, we are now going to do one of three things. We are going to reverse, we are going to continue higher, or we're just going to consolidate. Okay. And a lot of that stuff will happen at 10 o'clock. So if we wind up reversing, or if we wind up continuation, okay, it's at that time we are going to use shorter time frame levels to determine which direction we're going to grow based on that 10 o'clock opening. But on that 10 o'clock opening, we are really just waiting for some type of manipulation to go higher or lower to continue what we've been doing the first half hour, or it's going to be a reversal. Very, very key time of the market. Why? Because that's when the 4-hour candle closes. That's when the 6 to 10 o'clock candle closes and the 10 to 2 o'clock candle opens. Very, very important time. Okay, now 10:30 comes along. Now the initial balance gets created. Okay, the initial balance gets created. Now, why is the initial balance important? Once the initial balance is created at 10:30, typically we're still going to be within the high or low of the initial balance at 10:30 because it's going to mark out the high or the low. Now, sometimes we'll be right near a high or low. Sometimes we'll be way off of it. Okay. Now, here's where the 10:30 trade comes. Okay. It's called the draw on IB high or low trade. Why? Because there is a 96.4% chance that during the day we will hit either the low or the high of the initial balance. At least one of them. 96.4% chance. So if we have not hit the initial balance low or high after 10:30, we are now looking for trades to target initial balance lows or highs, depending on which side of the midpoint price is at. We're looking for that draw on liquidity. So we're looking for something specific at a specific time of day, which is completely different than we were looking from 9:30 to 9:45, and then we were looking for at 10. You see where this is going? Things have different agendas at different times. Now, once we get that draw on liquidity trade, as you can see, we got one here this morning. It tapped into the low. One of two things is going to happen. Okay? If price fails to attract buyers above or below the initial balance and comes back into the range, there is no more counter trend trading. Meaning, once price hits and breaks through initial balance low, there's no more longs. There's no more interest in long trades anymore. You can sometimes get some long trades back to the initial balance midpoint. These are not very high percentage trades and they don't deliver very well. I'm not a big fan of these. Because once price breaks below initial balance low, there's only a 20% chance it's going to reach the initial balance high. So your chances of reversal are only 20%. Those are terrible odds in trading. Most of the time, when it hits the initial balance low or high, it's going to do one of two things 80% of the time. It's going to stay in balance the rest of the day, in which your day is done. If we hit initial balance high or low and we do not expand below or above, your day is done. We are not trading inside the initial balance. That's like trading inside of a deformation volume profile. It's suicide. It's a balanced market. Now, when price gets outside of the initial balance highs or lows, now we're in business. Why are we in business? Because now we have trending markets. Okay, here initial balance low, couldn't expand lower, we rebounded higher. Okay, here we took out the low, but then we expanded lower. Eventually, overnight, we moved back higher. But the whole idea is that after 11 o'clock, like this, after 11 o'clock, if you break outside the initial balance high or low, and you break above and expand with a fair value gap, that's the most important thing. We need to close on a 15-minute with expansion. Fair value gaps and displacement are everything in trading. Without displacement, there is no bias, there is no trade, because displacement shows institutional intention. Without institutional intention, I have no interest in the trade. Okay? So therefore, now you know you're in a trending market, and all you need to do is find levels where you can buy dips and move into higher levels. But the good thing is you know you're not shorting. So by doing this, you have put a schedule in your day. 9:30 to 9:45, looking for pre-market liquidity to be taken out. That's it. 10 o'clock, we're looking for a reversal or a continuation move. Okay, again, I'm not going into the logistics of those moves. That's for another day or another webinar. Okay, we're looking for a continuation or reversal. Once 10:30 comes, we have the initial balance. The first thing we're looking for is to trade into the initial balance low or high. Whichever one is closer, that's usually the one we're going to draw into. 96.4% of the time. Those are great odds. Okay, once we hit the initial balance low or high, there's no more counter trend trading. This happens between 11, usually between 10:30 and 11. Okay, if we expand above and below the initial balance, now we can continuation and trend trade into the next levels that we have on our charts. Remember, we have everything marked out, right? You have everything marked out. So when you trade below an initial balance like here and expand, you now have these levels to trade into. Those are your targets. But you have a schedule. So at 11 o'clock, if we are not expanding, your day is done. If we are expanding, it's very easy to see. We are expanding and closing and accepting price below initial balance low. That is bearish. We should continue lower. You're now looking for fair value gaps and continuation models lower. Same thing on the upside. When you get a move above, a strong move, you're now looking for continuation models to the upside. Okay, there is no argument for a counter trend trade. There is no argument for longs here. There is no argument for shorts here. Plain and simple. Okay, now that's the kind of schedule that we're on. And the reason why this schedule is important, because each time during the day, you know exactly what you're looking for. You're moving on to the next level. You're looking for certain trades during certain times. And all you're doing on your chart is moving from level to level to level. That's all you're doing. Okay, if we break out of one level, you're going to move to another level. Okay, if we fail to hit one level or stay above one level, you're going to trade back down to another level. You're trading level to level to level. And now you have a schedule to put you on a time of day to trade how the market and what agenda, because the market has a different agenda during the day. You see this now. During those times of day, the agendas are different. Our entry model and what we do is always the same. It's very simple. Okay, it's tapping in to a higher time frame fair value gap. Okay, taking out some type of internal liquidity. Okay, and then having an inverse fair value gap out of it. Accumulation, manipulation, distribution. That is our entry model on every trade. Okay. And sometimes there could, instead of a fair value gap, there could be a POC. That's our entry model. This is what you want to see at key levels: fair value gaps or any key levels. We draw to them, we draw them away from them. Okay. So in the Accelerator program, we go through this on a recurring basis. Yeah, we have methodology videos that will go into so much more detail than I even went into today. That lays the foundation. Okay. But then we take that foundation and we move it into the live teaching environment. Tuesdays and Thursdays at 2 p.m. Eastern time for at least an hour to an hour and 15 minutes. We do classes and we work on concept and theory live, me and you guys. Okay. It's lecture in nature, but we're going over different concepts in theory. We're back testing. We're showing trades. We're going over price action for that day. It's just something that you go over and over and over. Okay. Here's the best part. Monday, Tuesday, and Wednesday, Accelerator students have the ability to attend our Q&A sessions. That's right. 3 days a week. Wednesdays, we usually do it midday. Fridays, we do it at 8 a.m. Eastern time. Monday is flexible. You get a chance to come on a Zoom call and ask any question that you want about anything, a specific trade that you did. You're struggling with some type of issue or some type of concept. You want to talk about prop firms. You want to talk about risk management. That is your time. Okay. So not only do you get courses in the concept and theory, you're going to get access to me in the teaching environment and the Q&A environment. This is how you'll learn how to do this in more detail, but more importantly, you'll be able to see it applied and you'll be able to ask for feedback when you need it. Okay. All right. So I'll take a few questions now. I don't know how long we do, but before I do, Sterling, do you want to kind of say a few words before we take questions, just in case people want to leave for questions? And I know this is recorded, so
Yeah.
I did go over about 10, 15 minutes that what I wanted, but I did warn you about that.
Primarily, I dropped that link in for the offer.
Okay.
The the offer, as mentioned in the email, we wanted to make, one of the things that David didn't mention. This is something that Dale and I are kind of running this as a pilot offer for you guys in the Accelerator program. So it's not going to be something that's available on the site after the 21st. We are offering this once to you guys, and so that's not like I don't hate to even phrase it like that, but that's just how we're doing it. Um, so you guys are all aware of that. It's not going to be something that's available on the site after that. It's going to go back to a member only offer. The primary reason for that is I'm going to do something a little special. Anybody that's signing up for the webinar, I primarily work with our funded Trader Academy guys. So I'm working directly with people one-on-one. What I'm going to do is small groups, either 5 or 10. Based on how many people are signing up. And I want to run through some similar kind of basic things that are really going to help you in the accelerator to give you, also kind of a look at more of that one-on-one too. So I can't really do that with the amount of people we would get if this was on the front end of the site. That's why we're offering it during this time. It's going to be something I do a little special for you guys. I hadn't even mentioned that to David either, but give you a little white glove entry. And then at $39, I mean, it's to hear David talk, I think you guys will see the value. I'm not going to pitch you on the value, but you'll see that within there, all the success within the other members. And I think that's probably the most encouraging thing is seeing other people just like you that come in, a month, 2 months, 6 months down the road, and they're getting not just funded, but they're getting payouts. And you'll see a lot of that as well. So, anyways, look forward to seeing you guys. I will work on getting the small group set up once the sale is done. It ends on the 21st. So I'll probably start those next week with you guys, and then work through that over the next week or so, really giving you guys a great start. So anyways, here's the link again to the payment. If one of you guys, I can't write in the question, or sorry, I cannot write in the question and answer section. So if one of you guys can write payment link, I will respond to it with the link and it'll stay stationary. It's for some reason I cannot do that in the Q&A, but because this will keep scrolling up. But either way, that's my
Oh,
little
it's
bit.
there
I'll
now.
hand it
Yeah,
back
it's
to
it's
David.
there now. Yeah,
Yep.
yeah. Okay, yeah. Let me try and see if I can get through some of these questions here. Bala, we do list the indicators for TradingView and NinjaTrader 8 in the when you come aboard in the Circle community. They're all free. They're not. Yeah, they're scripts that we write. I mean, these are easy scripts to write. So yeah, we do have for NinjaTrader and TradingView. There'll be a section in there for that as well. Oscar, so counter trend, it's for like during the IB, right? The IB is taken out for the, yeah, we're not really going to get into trading strategy. I mean, we can go on for hours talking about that, exactly what it's like, but the IB is just such a powerful tool. I mean, it's one of my favorite things. It just gives me structure during the day. It just gives direction. It just helps stay out of bad trades. And it's just so accurate. It's just unbelievable. But yeah, we'll go more through it. How do you consider authority of regular trading hours VWAP versus IB? I like the IB better. I just do. I don't really use VWAP too much. VWAP would be a very good confluence tool for initial balance. That's what volume profile VWAP and IB were kind of meant to be together, to use as a confluence together, and they are. I just don't use the VWAP. I use the IB mainly, but VWAP is a confluence and if you're comfortable with it, yeah, it's meant to use with it. So 100%. Everything's recorded here, so if anybody missed anything, yeah. Isn't 930 high same as previous day high? No, 930 high is never high as previous day high. Okay. Yeah. Let me go here. Let's see. So these are complex and fly. Yes, 100%. Actually, Pieter, trading FX pairs, it's even simpler because, well, it depends what you're doing in FX pairs. I mostly have only swing trade FX pairs. So when you're swing trading FX pairs or looking at higher, there's so much less to deal with than this. So, but yeah, but everything that we do here, except for the initial balance, that would be the only thing because there's really no initial balance time for FX. They say there is, but I don't really like it. Like crude oil has, 9 to 10 a.m. Gold is 8:20 to 9:20. Gold is very good initial balance. But FX pairs, everything here works with FX pairs, just not initial balance. The IB for New York session, Edu, is 9:30 to 10:30 a.m. Eastern time. Bala, that's all we do is trade the NQ and the ES. So that's what the Accelerator program is for. That's exactly what we do. Raju, yeah, that's the FTA, Raju. Yes, that's the FTA. The FTA is the full mentorship program, not the Accelerator. It's different. The Accelerator was created for two reasons: for people to kind of give us a look. There's a lot of things out there. And some people sometimes people want to get a look, but once you get a look and you get used to me and you get introduced and you meet everybody, a lot of times that will be a precursor for you to join the FTA. The accelerator is also for people who the FTA is not for whatever reason. Bala, yes, it's 39 for the first month, then 79 a month after. It's 79 a month, but you get the first month for 39. It's just a hey, if it's for you, great. If it's not, no issue. If the Funded Trader Academy is a better option, we could talk about that. But yeah, $79 is the ongoing fee. No, John, I don't use order blocks in my trading. I'm not going to tell you I never look at them, but no, I don't. I find order blocks are very subjective. So is change in state of delivery. All those ICT concepts very subjective. I don't need order blocks because order blocks are everywhere. Okay, now sometimes you get an order block. Like if I get an obvious order block, yeah, like here I was talking about this with my students last night. This 30-minute order block and change in state of delivery. Yeah. So by the ICT definition, that's an awesome order block and an awesome change in state of delivery. Awesome. You know what? It happens to be a light bulb order block. So, and it takes out liquidity and it delivers into a point of control. If I get one like that, yeah, I'll consider it, but just as a confluence. That's all. Just as a confluence. Chances are I'm probably already long here or getting long up here. Depends. Does footprint and dome add some kind of value? So footprint is an excellent confluence tool for this. Yes. Dan in our FTA program is our expert at it. So is Dale. He actually is writing a trading view script for footprint. So yes, those type of strategies and information do play a big part. I just didn't show you it today because I can't give footprint its due in a 45-minute webinar. Initial balance is the first hour of trading, the high or low, Terry. That's it. It's marking out the high and the low of the first hour of trading from 9:30 to 10:30. That's it. Simple as that. And it's drawing a midpoint. Displacement is a fair value gap, Jasmine. That's it. It's a fair value gap. Displacement. See how price moved down here? It left a fair value gap. It displaced lower. That's called displacement. It's intention. When price is leaving fair value gaps on the way, like it does here, it's displacing lower. It's showing strong intention in that direction. That's what you want to see before you trade. Sterling, it looks like a couple of people may have issues with the link. It looks like Dean had. I'm not really sure. Raju, no. The FTA is all inclusive. I think you're on my calendar for tomorrow or Thursday or Friday, so we'll chat when we during our appointment. Michael, you could do whatever you want. The Accelerator program is a month-to-month basis. You could do whatever you want. You can dip in and dip out. You could do whatever you want, my friend. You know, it's a subscription basis. Like I said, it's meant for people who the FTA is not, and that would be a valid reason. Totally fine. Good question, James. Yeah, the Accelerator program, everything is recorded. The Q&As are recorded. The meetings are recorded. And here's the best part. We'll give you an AI-generated review and an agenda for the meetings. So when you go to the link, you can go into the text and see exactly what the meetings were about. And you can go into previous meetings and do the same as well. And even better, we're actually working on a search engine AI that will allow you to search meetings that want the topics that you want. So let's say you want and you want to know more about initial balance. So you type in initial balance and it will list the accelerator meetings that focus on initial balance, so you don't have to sit through it. It's going to be a great tool. It's almost ready. Actually, Sterling, if you're listening, Jim asked me to ask you about that today. No, we do. I'm not gonna go in. They're just key levels. I'm not gonna go into how we trade it because I can talk for hours about that. But no, you don't only trade it for 30 minutes after that. You trade the current day. It's providing you a roadmap for the rest of the day, and then previous ones act as key levels too. You'll see in more detail, but yeah. Yeah, Raju. Yeah. I'll speak to you individually. Latoya, what do you consider old? Like you used to be a student, or you're as old as me? I'm 57, so I'm not sure. I'm not sure what you consider old. I don't have a go-to time frame, but the one thing I do, Greg, is I get all my trade ideas on the higher time frames, usually 4 hours and above, 4 hours in the 1 to 4 hour range. That's where I get all my levels and ideas from. I only use short-term charts for execution and 15-minute charts for narrative. Every trade has three categories for every trade. You have to have a bias. Where is price going? You have to have a narrative. If price is going there, where are we going to deliver from? And then you have to have a target and an execution. That's it. Different time frames are used for bias, narrative, and target execution. But all my trades come from the 1 hour and the 4 hour. That's where my bias and everything comes from. I just execute on the short time frame. But I put all my higher time frame levels on my shorter time frame charts. So now I can react. Yeah, Chris, the Tuesday, Thursday sessions are all listed in the Circle community when you come aboard. The schedule's all up in there. The Q&A sessions Monday, Wednesday, and Friday, I post that morning only because sometimes they could be flexible. But yeah, the schedule is in the Circle community. Sterling, someone's asking for a PayPal. Oh, you did that. Okay. Someone about PayPal. Yeah, James, you'll get the schedule is in there and you'll get notifications of everything that announcements that happen. Yeah, it's a very good system that communicates very well.
There's a question in the Q&A. I'll just read it to you. It says, "How much is transferable to Asia and London?" Thought that was a good question.
Depends what you're trading. If you're trading the NQ in Asia, you're not going to get great price action. Sometimes in London you will get decent price action. In London, you're basically going to use Asia highs and lows for liquidity. Now, if you're trading currencies in London, I love some of the currencies that we trade in London. Right off the London Open, the kill zone, sometimes we get these divergences and impulse moves. So I like the London for some currencies. I like the Asia session for some currencies, like the Japanese yen or the Australian. So yeah, the Asian session and London sessions will move. It just depends on what you're trading. The concepts that we go over are good for anything. You can trade gold and trade Asia session and use these concepts. You can use the initial balance for gold, which is 8:20 in the morning till 9:20 in the morning. And that initial balance level on gold will last the entire day into the next Asian and London session before the New York Open. So yeah, I mean everything can be used here for Asia and London. But again, it just depends on what you're trading. So around live room is twice a week. No, so okay. So when you say live room, this is not a live trading room. That's in the Fund to Trade Academy. This is a lecture, concept and theory sessions twice a week, and then Q&A 3 times a week. Yeah, and then you get student. Yeah, you get daily market review and preview. I did forget to mention that. Yes, yes, you do get a pre-market video and a post-market video. So anybody can join the Accelerator program, Bala. You're here to learn concepts and theory, and you're here to learn from somebody and have human contact and be able to ask questions instead of just learning about it from YouTube or a course. Yeah, Michael, everything is recorded. You could submit a question into the Circle community, not into the Zoom recording, but into the Circle community. Study material. Well, we have methodology videos that are in the Circle community when you join. It's not on Discord, WAP, or any of that. It's in the Circle community. Is there any similar program that includes only the volume profile and VWAP? No, no. Most people are trading price action. This is what most people are trading. We do trade with volume profile, but I would stick with what Dale's doing. I don't know if the accelerator would give you that much benefit, but you can come and see. Is there info on prop firms inside the accelerator program? No, the accelerator program only focuses on trading. That's it, trading and strategy. You're on your own with prop firms. In the FTA, we help with prop firms, but not with the accelerator program. Accelerator program is only about trading. Okay, we're going to blow it out of the water, but it's only about trading. Oh, Latoya, former students. Yeah, it's for anybody. It's for anybody. There's no program start. You start when you start. There's no start time. It starts when you come in, Bala. Do you use fib levels with initial balance? I do not use fib levels. Greg, you can get access to anything that you want as soon as you're in the program. Everything I showed you, everybody has access to.
So, David, would you mind flipping to the members area so they can see what's in the members area? This will give you guys a better view. So,
Oh, you mean okay?
yeah, for you guys, a lot of you guys, again, because this has never been offered to the public, you guys probably you're not members of Trader Dale, so you haven't seen the members area. So what David's going to do here is just go into the members area. Now, on the left-hand side, the Funded Trader Academy stuff will be, you won't see that. If he puts his, uh, those other things you won't see, but all there under the TD Accelerator, that is the Accelerator section. So it's all the indicators, TradingView and NinjaTrader, multiple chat rooms for day trading, swing trading, the student chart analysis for you posting your charts, getting feedback, the reviews and previews. That is the gold. Or that's, one of my opinions, one of the real benefits to this. Obviously, the room and everything else, huge benefits, but great way to start the day. And then the methodology section, that's essentially the trading course that details the process. And again, like I said with you guys, I'm going to be I'm going to have one session with you guys to kind of give you a little bit of a hand-holding experience. We only typically do for FTA. And we're going to do it in group sessions. So you guys are going to get a really nice start in this. And I mentioned earlier that we do talk about prop firms. I know David said that's not a focus, but if the point I was getting at is that if you guys need, recommendations, advice on this, happy to help with that. That's something that
Oh yeah, I mean,
you're always welcome in messages.
If we're in a Q&A and you
Yeah.
say, "Hey, is Lucid a good firm?" I'm not going to say I'm not going to answer that. What I mean, we don't go into helping you get funded and working with your numbers.
It's not a it's not a one-on-one thing.
No, we
again,
talk about prop firms all the time, but it's just on a general basis. And
yeah. All right. So that's, that's the back end. And then, essentially that's what you'll have access to. And then the schedule's in there, obviously, for the live room schedule. And then the announcements, under announcements is where he puts the Monday, Wednesday, Friday room. And all very simple. You mess around with it for 5 minutes, you're going to have a great idea of where everything's located. And then that session I have with everybody is really going to help you.
Yeah, everything is right here that you'll need, like Sterling said. Announcements. Anytime I do like today, we did Q&A in the CPI this morning. I'll announce all the QPA, the Q&As, the links, the passwords. Any announcements I have. We were talking about eNano futures the other day. Here's the live schedule. Everything's here. Just go to the date, click on it. It's every Tuesday and Thursday. They're all there. Then the recordings in this section, you can go to any Q&A and accelerator meeting. You can go back all this time. And like I said, one of the best features that we have here is that if you click on an accelerator meeting, it gives you a AI transcript of the meeting, what we covered. So that way you can kind of see what it is and, kind of just get a synopsis of what happened, action items, next step. The stuff's absolutely phenomenal. Every morning we do a preview of and a review of the currencies and the equity indices preview, and at the end of the day we do a review. So you'll get that. So basically, when you come into the accelerator program, everything I showed you today, I'm marking up your charts for you. I'm marking up all the key levels. That's what the previews are for. You're supposed to learn from it, but that's what it's for. And then the review is to review the trades. Daily day trading analysis is just for me to dump anything that I want to talk about. It's just for me. Okay. AP student analysis. This is where you can communicate with me by asking questions. This is where you can dump whatever you want. As if we're out of meeting time, dump it right there. There's a day trading chat that you can communicate with other people. It's really not that active. People don't really like to use it that much. No big deal. You should find a trading partner or a study group, but these big chats, they're there, but I'm not a big fan of them either. Now, here's the Trading View tools and NinjaTrader tools. So all the indicators and things from Trading View that I talked about are all right here. They're all free. They're all free. They're all free for everybody. They're all free. Okay. And then NinjaTrader tools, there aren't as many, but everything that you need is there. Okay. But yeah, you only have access to this as long as you're a member of the Accelerator. So that's the only time you have access to it. You don't have access to it if you unsubscribe. I think I saw that. Now you don't have access to members area previous recordings if you stop. You have to be a member. Yeah.
You're not even going to go to the my favorite section, the post your success section.
Okay, so so post your success. So this is just for people to post what they want. Usually they're talking about a payout or something. It's we try to encourage people to, and I do this in the live rooms too. We don't like to post like profits and losses. I want to see your success. I just got a payout. I just passed an eval. I just did a good trade. You know, we don't. It's not to show like, oh, I just made $2,000 today, and not show anything else. We try and keep this very professional, not like a Discord or a chat room. So we don't talk about how much money we make or we lost or anything like that. So that way no one feels bad, because the biggest problem with trading is watching other people make money when you're not yet. It's very frustrating. So this way we kind of keep it, up and up.
Yeah, you'll see a lot of members through there, longer term members, like updated over 12 months of time. And that's really cool, seeing the success in the members. But like David said, um, it's kind of a fine line there. It's nice, but it is nice showing you guys what other members are doing, and you'll be essentially working the same process they're working. And like all things with trading, like David mentioned, this is not an easy process. It's a process that takes time regardless of what you have as far as education goes. But everything is going to be laid out in a nice, clean, step-by-step method that you can go into the day and have confidence with. You're not going in the day guessing. You're going in with an exact plan and working that plan. So anyways, that's all for me.
Good. Yeah, Sterling's right. The schedule is huge. Just not having the market open and say, "Oh, I got to look for my pattern." No breaking down the day like you do at work and have a schedule on what you're looking for on based on what the market agenda is. Now, this is obviously just New York session. This has nothing to do with London. There's other agendas in those sessions. We're talking about equity indices from 9:30 on. Okay, but the market always has agendas, at any time during the day, and it's very important to break them down. The market's just not open from 9:30 to 4. Okay. And we don't do anything after 2 o'clock. Nothing. I don't use VWAP. You can, Robin. I know Dale uses it and Dan uses it. I don't really use it. Manesh, Sterling, where people want to know where the link is. I don't know if you can post it or pin it somewhere. Yeah. So yeah, this is the community. You have access to everything here. And there's a lot of information that you can go through between the methodology videos and the past sessions. Those you do at your time, and then when you come to the meetings, you're being taught by a live teacher. And then you have the ability to attend Q&A questions, which are invaluable because that's your one-on-one time. You know, Nowhere else are you going to get this type of one-on-one time for that type of monthly subscription. Okay. But we do it in a group environment, so that's how we can do it. Okay. Any other questions anybody else has? I could have talked for another 2 hours, by the way, and you'll know that about me when we start. I happen to really enjoy looking at charts and talking about trading. I think it's an awesome thing to do, and that's an issue with trading because one of the problems is if you really enjoy to trade that much and you love what you do, you tend to want to do it more. And this is a less is more business. That's the problem. It's a less is more business, but naturally your mind is trained to do and want to do more that some things that you like. There's such a dopamine and great satisfaction to a winning trade and making money. You want that feeling, and that's what forces people to overtrade and then revenge trade because they can't accept losses. These are the things that will help you get over. And sometimes the things that I just mentioned are more important than the X and O's of trading. They really are. I've seen plenty of traders who know what they're doing, concept and theory wise, but they can't get out of their own way. And Sterling, you deal with a lot of students also. You probably see it too. And then you see people who don't, keep it simple and just have no fear and they trust the process and they have good structure and they do very well.
Yeah, it's a
Which
psychology
person are you
game
going to
for
be?
sure.
Yeah.
It's a mental game for sure. I always relate back, one of the reasons that in 2014 Trader Dale went to more of a live room was because both Dale and I had big experiences with a live room ourselves. And mine personally, again, I talk about this 20 some years ago. I met a guy named Tim Swanson, and the guy, while I don't use the strategy, the things he taught me, such as how to not trade, how to not revenge trade, how to, use proper risk. These are the things that, like, the intangibles outside of strategy that are really what make or break traders. And that's what you kind of get rubbing shoulders with somebody who's been, David's been on the professional side of this industry. He's been on the retail side of this industry. So the knowledge he has and kind of rubbing shoulders with him daily, you get all those intangibles that when I look back on my trading career, that is what turned me around. It took me 5 years as well, but it took me 5 years because I just made all the same stupid mistakes everybody does. And it wasn't until I really, saw somebody make way more by doing less. And really just being a sniper, waiting for the trades, getting snowed on, snakes are crawling over you. You're waiting for your one shot because that's really what the best traders do. And the statistics from prop firms show that that is what the best traders do. So that's what we do here. Give you that, one shot type mentality where you're really focused on quality over quantity. And then the beauty, because I've been in education, I ran a site called Day Trading Forex Live for 12 years. I traded live in front of the guys every day. That's all that was. And one of the things you learn in that environment is that there's certain people that are great traders and they can't teach. And that's a problem, right? So not only does the thing I like about David is he's not just a great trader, but the guy has the ability to convey the message. He's happy to repeat the same thing 5 times from a few different angles, right? Like he might give you his New York attitude, but he's happy to do it, right? And so that's the thing is you got to have a guy that can actually convey the message that he's doing because some of the best traders I know are some of the worst educators. And David does a great job of doing both of those. So I look forward to seeing you guys on there again. You'll be hearing from me on the private rooms. I'm doing a special little private room with everybody that's signing up. Bunch of signups already, so you'll be hearing from me in the next couple days, and we'll probably tomorrow for the first batch, and we'll start running through those. I'm gonna sign off, but I'm gonna hand it over to David. He can say see you later.
Yeah, I think we're good. I think we've gone through all the questions, a lot of good questions. And if anybody has any more questions, just shoot us an email. Here's just here. I'm gonna put my email address here. Here's my direct email address, David at Trader Dale. Yeah, shoot me an email if you have a question. That's it. Question, comment, concern, any you want to schedule an appointment, book a call, anything that you want. All right. Dale, Sterling, thank you. Good session. If anybody needs us, there are emails for anything. And we look forward to seeing everybody here on the inside, okay?